Alright, this video is going to be a little bit different of a video of mine. We're going to kind of get into a little bit of a pet peeve that I see going on, not just in the silver market, but in all the markets. Welcome back to the RuralStacker channel. Thanks for stopping in, neighbor. Okay, so Thursday night, I was, kind of thinking about a video I wanted to release, and I started doing some research into it, and that video was never released because as Friday rolled around, I kind of had that crash. But the video was basically kind of going to outline if we were getting close to the top of silver. And the points that I was going to make on that was that volatility picks up towards the top of a bull run. Now, I never made that video, so you're going to have to take my word on this that, it was going to be made. But, so basically, I'm not going to pretend to be a chart expert or a candlestick expert. I know enough about both of those to lose money, successfully in the market by using them. But I do know a little bit about the fundamentals, what they show. Looking back, again, can't really apply it going forward, but looking back, I can read it and kind of pull out some data. And normally during a bull run, when you're in the early to mid stages, volatility is pretty low. And for those of you that aren't aware of what volatility is, it's the price swings day to day. Some people equate that to fear in the market. It's just basically a back and forth between higher the price swings going on in a period of time. So as we were coming up on Thursday and this past week, last week there, we seen that volatility was increasing, right? And there were some topping indicators going on that I was looking at, and kind of when compared to other rallies in the past, not just silver but across all different kind of markets, we were starting to see that volatility really increase. So we had 5-10% swings going on, and it was really pointing to towards the top on Thursday evening when I started putting this video together. The video that was going to come out was not going to call it the top. That's not what I'm saying. I was just going to point out that we were seeing increased volatility, and that happens at the top of a rally. And I was going to question, are we starting to see the top? And that, was never made. And I decided not to make it because, by the time it would have been out, it would have been old news. So I didn't put it out, but now that we are looking back on what happened Friday, and we could see it, I kind of also thought all weekend of another video. And currently, when I am filming this later Sunday evening, who knows what time it'll be uploaded with my dial-up internet out in the middle of nowhere, this also might not age very well in the short term. So if it doesn't, we will consider this a pre-warning for the next drop that we see. Or if the metals keep going down like they did Friday, this will be even more applicable to that scenario. So what I want to get into is a pet peeve of mine, really, that I see just kind of in the markets in general towards any investing, not specifically silver and gold, but I've seen it a lot more across some channels and comment sections with silver dropping. And That's like the psychology around, buying an asset when it's, down, or in a downtrend, the catching the falling knife, and people are so averse to that. And why I don't really understand it is because, if you're buying something else, like people will go out and buy a TV when it's on sale or clearance, but they're not going to buy silver. And what I have right here are the last few purchases of silver that I got. I got 3 military rounds from the U.S. Mint at $90 an ounce. I did give one of those away to my buddy, and he loved it. I think he's definitely going to probably get into stacking silver and gold after that. So that plan, worked out for me. But he was really thankful. And then these 2 bison rounds I got at $76 an ounce. There was a couple other ones around there, I think around 82 or 83, but these are just for an example. Because it's not really about a stacking video. This is more of a mindset video. So when I bought these last 3 silver rounds at $90 an ounce, I made the decision that silver at $90 an ounce was a buy. The silver hasn't changed. The price has. So when it dropped down to 85 on Friday over the weekend, to me, it's an even better buy, right? If it made sense at 90, it makes sense at 85. Especially when I believe in it long term, like I do. The silver itself has not changed. It's still the same bar, still the same round. There could be 100 different reasons why silver went down, and I'm not going to pretend to know why or what caused it or whatever that. I mean, that's not really what this channel's about. But, one of the big things was new Fed chair, right? And that's great. We got a new Fed chair, but what happens when a new Fed chair comes in 4 years, right? They're 4-year terms. We'll have a new president by then. There's a good chance we could get a new Fed chair, or you can stay for 8 years. But same applies. What happens in 8 years after we get a new Fed chair? Silver and gold could easily go back the other direction, and all I think about is if silver will increase in value over the next 30 years that I plan to hold it. I apologize for my dog in the background. He gets a little sassy late at night. So, hey, stop. That's enough. He's also deaf, so he can't hear himself. I'm going to pause, and I'll come back to this. Alright, so I was somewhere around saying, is the value of silver going to increase in the next 30 years that I plan to hold it? For me, that's a yes. This is a short-term scenario here. I think a lot of the silver community gets too distracted by the day-to-day noise when, silver and gold we got into for long-term protection, right? And I ask you, what are the reasons that you started stacking silver? Have any of those specific reasons changed, or has just the price of silver relative to the US dollar changed? And, out of all those reasons that somebody might have of getting into buying gold and silver, I can think of a few that, may have changed. Is, the first one, like you bought silver because it was cheap, or that you thought it was going to be a trade to make money. If you bought it because it was cheap, you probably also thought it had value. And let's be honest, because nobody buys something for the single reason of because it was cheap. They'll buy things because they're undervalued, or it might be cheap, but it's still useful in some way. So there's also, that's not the sole reason, right? That somebody buys it is just because it's cheap. If that's the case, you'd be buying paper straws, right? They're cheap. So go out and stack paper straws. But that's not the case, right? And if you bought it because you thought it was a trade to make quick money, well, chances are you didn't expect it to go up this high. If you bought it as a trade, you should have had an exit plan and probably got out already, right? Because, the price of silver jumping up like it did, any target that you would have set would have been hit long ago. So I'll ask again, if you were buying prices at above the $85 mark or whatever it is now, whenever this video uploads, if it's lower than what you bought at your previous high, what has changed other than the price went down? All right, you want to buy everything else when it's on sale or discounted, or a buy one get one deal going on. So why aren't you doing that with silver? You need to think of it in the same way. Gold as well, right? The silver hasn't changed. It's just the relationship to the dollar. Now it's just cheaper and on sale and selling at a discount. If it's a long-term investment and not a day trade, which is what silver really is and gold is, right? Or at least that's what you believed 5 days ago, then treat it like that, right? Think long-term, not day to day. Jumping back in here, editing this video, I do understand that there is a opportunity cost to every sort of investment out there. If you spend your money on one thing, you can't spend it on another thing, right? So that part I do understand, but if we're investing in the long term, then we need to treat it as a long-term investment. That doesn't mean that you can't make an adjustment one way or the other to deploy your funds in a different direction. I'm strictly talking about the valuation of silver that you thought was worth a price higher than what it is now. Why would you not buy it at a lower price than what you previously bought at the high, if you believe in it long term? And really, realistically, silver still ended positive for the month. Again, I apologize for the dog. He's sassy at night. Silver still ended positive for the month, and it isn't as bad as the headlines made it seem. Really, if you were following along, you knew that there was going to be some sort of a price correction. Everybody was talking about it, and we seen it, right? Which is ultimately normal for something that gets traded. So, yeah, that's my rant. That's my soapbox. Let me do a quick price. Okay, it's still currently at the time of this video, it's still under 87 bucks. And, I remember saying that I thought we were going to go sideways at 75, and I was surprised that we didn't. Maybe I just haven't given it long enough time to, come to fruition. But if it doesn't, oh well. I'm seeing this as a big discount, and if it keeps going down, well, if we really believe in it long term, then again, sweet discount, good buying opportunity. This is what we were all talking about. When it hit $100, oh, I wish it was, back down to 70, 80 bucks. Well, here it is. Here's your discount. So maybe capitalize on that if you believe it long term and block out the noise. It's the last time I'm jumping in with the edit. I should clarify that I did not buy or sell on the dip. Part of that is because I didn't have any dry powder that I was ready to deploy for the dip. I'm trying to divert my funds to max out my Roth and my wife's Roth IRA because I thought silver was a little bit too high at above $100 for my comfort zone. I thought the opportunity cost would be better off maxing out the Roth IRAs, and that's still my plan. But I'm watching the prices slowly here, and if we drop down into 75, 65, around there, I'm going to switch up my strategy and buy something, at the discounts. So while I'm not taking my advice right now around the $83 mark, $82, that doesn't mean that I don't believe that it's a good price right now. It just means that, my plan was to max out the Roths here by the first quarter, and unless we see a bigger dip, then that's going to be the plan. But I'm also watching it, and if it drops down to 75, 65 an ounce, probably going to buy some, especially gold right now. Watching that, I'm going to capitalize on that. I was actually looking about doing that today, and I'm still internalizing whether I want to do that now or if I'm going to hold off a little bit, but I'm still going to take my advice, and if it comes down to those price ranges, I'm going to go back in, and I'm not going to be upset if it drops down to 40, after I buy that. Again, I'm looking long term, and in 30 years, when I'm considering selling, I think I'm going to look back and it's going to definitely be higher than what it is today. Again, none of this is financial advice, but just a different way of thinking about things. That's all I got for today. Sorry, a little bit different video. Dog was going nuts in the background. I apologize. But till then, thanks for stopping in. Have a good day. I now have a P.O. Box, and you can write me at RuralStacker, P.O. Box 107, East Brady, PA 16028 0107. I'll be looking forward to see what you got. Until next time, keep on stacking and have a great day. Please like and subscribe and share this video out to somebody who might find it interesting. I appreciate you.